If you're an entrepreneur looking to start your own business, there are obviously a number of things you need to consider. One of the things you might want to consider first is how you're going to set up the organization of your company or the ownership of it. There are 5 major categories you could consider. There's a sole proprietorship, a partnership, a limited liability company, an S Corp, and a C Corp. Now, amongst these, the first one is the sole proprietorship. It's the easiest one to set up. There's no special forms that you need to fill out, and you can operate with your own name if you so choose. You are the company. The sole proprietorship does not file its own tax return, and it goes through Schedule C on your personal return. You end up paying taxes on the net income. Easy, yes. The downside is that there is no protection for you personally. You'll carry a lot of personal liability as a sole proprietorship. The next type of business would be a partnership. It's very similar to a sole proprietorship, but it's what you would use if you have more than one owner. A partnership does file its separate tax return, but like the sole proprietorship, it carries personal liability. So if someone decides to sue your partnership for some reason, they can come after you personally. Another type of ownership is a limited liability company, or an LLC. This company does file its own separate tax returns and does offer you some protection from personal liability since it is an individual entity. However, it does still contain a provision that allows it to be taxed for personal employment taxes, which can impact your bottom line. Following an LLC is an S Corp or subcorporation. This business entity is completely separate from its ownership and does file its own individual tax return. It is also not subject to self-employment taxes. The net income does flow through to the owner's personal tax return, and depending on how profitable the business is, that can impact which tax bracket you are taxed at. The last option would be a C Corp. Now, this is a strongly protective company for you personally. It offers the most personal liability protection. The entity files its own tax returns and pays its own taxes. None of the net income flows through. However, because the corporation has its own tax rules to follow, it can be more complicated and the taxing can be higher. These are the 5 basic business structures that you could consider when setting up your organization.